In this video, we are looking at Harley-Davidson stock, ticker HOG. So we will look at their moat, their competitive advantage. We will look at some of the numbers, how Harley makes money, their main sources of sales by product, by region. We will look at their dividend, their debt level, and in the end we will try to come up with a fair value of Harley-Davidson stock using the discounted earnings method. So let's get started. First of all, the average viewer's age of this channel is around 35 to 40 years. So a lot of viewers are having Harleys or other bikes. So if you know about the brand, please write in the comments below your experience with Harley or other bikes. Okay, so Harley-Davidson is an iconic bike manufacturer. It has more than 100 years of history. They have one of the most desirable brands. A lot of people who try Harley stay with the brand forever. So the source of their moat, their competitive advantage, is definitely their brand. We can see that Harley is a $5.5 billion company. If we look at the price chart, we can see that the stock has gone almost nowhere from year to date, which is actually a very positive thing because the S&P 500 is down around 20% from year to date. So the stock is showing much strength compared to the S&P 500. This is actually a very positive sign. Okay, now let's look at their main sources of sales. So how Harley makes money. So the revenue for the last quarter was $1.2 billion. Of course, the main sources of sales is their bikes, so around $900 million. But they also sell a lot of parts, accessories, and apparel. So combined, they represent around $300 million for the last quarter. Okay, if you look at their sales of bikes by country, we can see that the most sales were in North America. Europe, Middle East, and Africa segment represent close to 10% of sales. So this brand is really popular and they have a lot of sales not only in North America, but also worldwide. We can also see that the revenue is lower compared to the previous quarter in almost all of the segments. But management is expecting in their guidance that the situation will improve in the next quarters. So the revenue growth rate will be around 5 to 10% in the next quarters. If we look at the long-term trend of bike sales, both new and used, we can see that by the year 2030, the compounded average growth rate will be around 3%. So we can see not only short-term growth, which is expected by management, but also long-term growth of bike sales. And Harley can definitely capture this growth as one of the most popular bike brands in the world. Okay, now let's look at some of the numbers of Harley. If you look at their debt level, they have around $2 billion in cash and cash equivalents and around $6 billion in long-term debt. So if you look at their debt to equity ratio, we can see that it is almost at the same level like it was in the previous years. So yes, they have a lot of debt, but according to its own history, debt not seems to be an issue. They are paying a dividend. They have around 1.7% dividend yield and a payout ratio of around 20%. So according to these numbers, the dividend seems to be stable. If we look at our free cash flow per share chart, we can see a steady trend up for the last 10 years. So Harley is a cash flow generating machine. This brings us to their valuation. What is the fair value of the stock? So first of all, we need the growth rate. Analysts are projecting various growth rates for the next 5 years. The highest that I was able to find is close to 10 earnings per share in 5 years. The lowest is around 6 earnings per share, so I will take the average from this range. So if we take the current earnings per share, we use the growth rate of around 15%, which is again the average growth rate that is expected by analysts, maybe a little on the high end. I use the required rate of return of 10%. What we basically do is that we take current earnings per share, grow them using the growth rate, multiply by future price to earnings. I use price to earnings of 10, which is lower than it was during the last 5 years. Then we discount it back to today using the required rate of return of 10%. As a result, we get the fair value of $53 per share, which implies around 40% upside from the current price. So according to this metric, the stock offers around 40% upside. Okay, in this video, we looked at Harley-Davidson. I like the fact that they have very strong brand. A lot of customers, when they start using the brand, they continue using it for the whole life. So they have very strong brand. I like the fact that they have managed to increase their free cash flow per share. So they're a free cash flow generating machine. They have dividend yield of close to 1.7%. And if we use discounted earnings per share method, the stock offers around 40% upside from the current price. Also, if you want to know more about other investment ideas, here's the video about Warren Buffett Discovery. If you are not subscribed to the channel, you can do this by pressing the button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.